being here today. It's really an exciting day and announcement evening for us and me. It's our first full year, and from my perspective, it's been really an incredible year that we've had as a company. Obviously, you've seen the press release, but I'll give you a few of the highlights. I'm truly pleased with the sort of results that have come about and with the transformation we've driven this year. And the results demonstrate some of the first steps of that transformation. We have increased our client relevance, and that shows up in our full year growth. A full year growth is 9% constant currency, and in the quarter it's 11.7%. So an incredible year for growth and further acceleration in Q4. Our sequential growth, constant currency basis, is 2.1, which is yet another strong quarter for us after the first 3 quarters of the year. Our clients are seeing more and more value with our digital portfolio. This was driving our full year growth. So full year digital growth is just at 34%. And the Q4 growth for digital is 41%. So we see again that all of our investments in digital are resonating with our clients, and we can see that this is further accelerating in Q4. At the end of the year, we now have 34%, just over a third of our revenue coming from digital. To give you one example, we are really delighted that our digital banking platform has gained tremendous traction in this fiscal year. We have 7 new global logos on our digital banking platform. And that's a real achievement with the way we've repositioned that platform, re-architected it, and driving the digital agenda. We've seen our clients select us for critical work across data, analytics, cloud, IoT, cybersecurity, all of the elements of our digital pentagon. On large deals, again, we had an exceptional quarter, 1.6 billion in new large deal wins. From that, a total of 6.3 billion for the full year. That's twice the value we had in fiscal 18. Again, our investment in sales are starting to help us build the momentum that we need. And we can see that in the number of large deals. And in fact, you'll hear some more stats on the net new in a short while. Our engagement with large clients is also growing well. The number of large clients over 100 million in revenue has increased to 25. It was 20 this time last year. What we see now is our planned investments in sales and in building a business model which is resilient via localization in all of our key markets. That's starting to pay dividends. It's yielding benefits. Our margin for the full year was within our guided band at 22.8%, and our margin for Q4 was at 21.5%. Going forward, we see the ability now to drive operational efficiency into our business. Overall, we see our business being more stable and better positioned to benefit from the shift to digital in the years to come ahead, and also to build business resilience into our model. All of that leads us to our guidance. Our guidance for fiscal 20 is revenue growth in the range of 7.5% to 9.5% in constant currency, and margin in the range 21% to 23%. I'll pause there and we'll open it up for questions. I also want to welcome Nilanjan, for whom it's the first interaction with you in this formal capacity. And we all look forward, Praveen, Nilanjan and I, to address your questions. Go ahead, please.
Thank you, Salil. Before we open the floor for the Q&A, I would like to reiterate, please ask one question per publication. And we'll begin with the electronic media. And the first question is from CNBC.
Hi, this is Mugdha from CNBC. Firstly, congrats on a great quarter and a great year. My question to you, Salil, is, why is the guidance so low at 7.5 to 9.5%, especially because you've doubled your deal wins? Why is it not reflecting the accelerated growth? To Nilanjan, I have to ask, why have you cut margin guidance by 100 basis points? And why was the Q4 margin at, 21.4%, which is much lower than expected? And to Praveen, attrition is still high. You've mentioned that in the press release as well, despite steps being taken by the company. What more are you doing? And, would this impact margins going forward?
So let me start with the guidance. I think the way we construct guidance is looking at what we've done in terms of the full year in the new wins, but also making sure we look at what's going on in the market. We have a very strong acceleration for the full year, and therefore guidance, if you recall, for fiscal 19 was 6 to 8, and we've now bumped it up to 7.5 to 9.5. So from our perspective, it's a very strong movement of the guidance in the growth direction. So we've not actually cut it in that sense, because we had a guidance this year of 6 to 8. We've delivered 9%, and this 7.5 to 9.5 fits very well within the range of guidance, within the range of growth that we anticipate for the full year.
Yeah, on the margin question, I think I'll just step back and go back a year when the new Navigate Your Next strategy was announced. And I think there were 4 key pillars which the company set forth. One was, of course, building the digital framework. And that, of course, has led to the increased growth. But this also called for additional investments which we had to make in digital talent throughout the year. So one of the reasons of the margin impact has been the investments we have made beyond digital, getting new digital talent into the company. If I look at the second framework for the Navigating Your Next, was about energizing our core, which is basically how do we get automation and AI and drive efficiencies in the operations during the year. And many of these are, of course, in our business passed on to our clients. And I think during the last year, we have seen about 90 basis points actually of margin efficiencies coming through the various levers which we have. The thirdly is, I think, in part of the strategy was localization. This is a very, very important future-proofing for the company. In the United States, we have been setting up innovation hubs. We are, I think, ahead of the peer set. We have set up 5 hubs across the US, and also hiring local talent in a global delivery model to de-risk our business in the future. And I think this is an investment which we believe is much required, and I think that puts us to build a much more robust framework and a model for the future years. And of course, the last was about reskilling our people. And I think as part of that as well, the investments we have made into refactoring our employees, I think that's also been the investments we've made. So I think as we guided the market at the beginning of the year, although we ended last year at 24.3, our margin guidance was between 22 to 24. So we had seen these investments coming, and we ended at 22.8. So I think this has been a thought-through program. And the guidance for next year actually reflects the margin of where we are from Q4 and how we build forward.
On the attrition front, attrition is definitely higher than where we anticipated. It's increased slightly from 17.8 to 18.3 at Infosys Limited level. There are multiple interventions we have started in the last quarter or so. We have come up with a new employee value proposition, which is focusing on engaging better with employees, enabling them, creating more career